Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn Associates with your agriculture update for this cold Tuesday. We're at January 29th, 2019, 2:35 p.m. Central Standard Time. I want to come out and be honest. I'm not going to the office on Wednesday, possibly not Thursday, due to the extreme cold weather Chicago is going to have. We're talking record-breaking cold going down near 28 below zero without a wind chill. 50 or more below zero. That's at least the forecast with the wind chill, and it gets worse Wednesday night into Thursday morning, so no telling. We'll put up a video of some type, but don't look for me in the office. Do look for me, though, if you're a subscriber to my morning subscriber video and or my written updates. Those will be coming out. I could just easily do my work off premise. So when looking at the markets, you can see a down day today. The USDA came out today. Actually, the CFTC came out today. And it appears we're going to start getting our commitment of traders reports. I'm tonight writing a series for you as to when the USDA reports are all coming out now about grain sales and supplies and so on and so forth, and how the catch-up goes. It goes into mid-February. I've already written it out. That came out today as well. When we take a look at soybeans, while they're down 6 cents for the week, they're still nicely over the 18-week moving average of closes. You know the Chinese delegation is in Washington, D.C. The formal meetings kick in tomorrow. Tomorrow afternoon we get the FOMC announcement, but I think it's all going to be about China, and I think the focus of the talk isn't going to be so much what they buy or don't buy. I think this stage of the talk has really got to go into intellectual property. They can say they're going to buy everything in the world from us, but if they keep stealing the products and we can't get a way for them to for us to verify and them to stop doing it, I don't know that these talks have anywhere to go. So we'll see what goes on, but that's what I think you're going to be looking for. You can see now that while you had a nice up move yesterday, you had an inside day, today an inside day. So we keep narrowing in the trading ranges right here, and as we're doing so, you still have the pattern of higher lows and higher highs. Now, should the market decide to suddenly step back and take out 913 3/4, that pattern would get broken, and this up leg, at least this leg of it, would be over. And you'd look maybe for the market to correct a bit, could be headed back down to the 18-day average to regroup. Not saying it'll happen, but I think triggering that number, and yesterday's low was specifically 915 3/4, that should pretty well do the job. That doesn't mean you enter a downtrend. It just means you'd end this pattern of higher highs, higher lows. The resistance of the market, if that doesn't happen, is still up here at the 932 1/4 area. The market is overbought, spent to a degree. We have 2 inside days back to back. It's certainly a pause in the market. In the oil and meal, what's bothersome to those that want to be bullish on the soybeans is that the meal market continues with this pattern of lower highs and higher lows right now. It is not trending. It does have downside bias, and it is oversold. It's almost a flip-flop of what the bean was, and as you'll recall, we had 4 days in a row up as of yesterday in soybean oil over the upper Bollinger Band. As I said, the odds gave it a 1% chance coming in today of staying over it when you use my rule of thumb that each consecutive day when you're over a Bollinger Band or each consecutive under counts as one of those percentage points. Well, today what the market did is it stepped to the right-hand side. That's all I'm looking for. And it tells traders that in one way, if you use this concept, maybe, I'm not saying you can, I'm saying maybe there's a better spot if you wanted to get long than buying over a Bollinger Band. In the corn market, what we have here is a pattern of lower highs, lower lows. Momentum is flat, bias is down. The market acts like a market that might want to dip down into the lower Bollinger Band. The problem has been it's tried this 2 times before and it's run out of steam, and it just goes back into the resistance of the combination of the 100-day and the 18-day average of closes. Should the market not drop down under 375 3/4 and get back over 381, you'd actually get a flip-flop of the pattern, turning to higher lows, higher highs, and putting 384 into play. In the wheat market, this market acts like a market that wants to reach down and hit its lower Bollinger Band. It has failed against the 100-day average in green in the upper Bollinger Band. It today confirmed a pattern of lower highs, lower lows, momentum down, bias down, lower Bollinger Band in play. In the sugar market, you've still got the pattern of lower highs, lower lows. Now, what would break that is getting over 1293. Not getting under that and clearing this 100-day average at 1262 could put this market on a path to try to get down to wherever this lower Bollinger Band is, probably near the 12-cent level. In the coffee market, the breakthrough yesterday of 142.30 ended up with feeble trade, 102.30. I'm sorry, I said that wrong. It was right back here. Yeah, 102.30. When that happened after this rally, the market just started, if you will, falling without movement one way or the other. It slipped down, came back, fighting against the 18-day average, out of a trend, caught very much in the sideways pattern. In the cocoa market, big surprise today. You had a day where you tried a good up leg yesterday. Let's see, that particular number isn't right. This chart is wrong. I'm looking at that. I know that's not the pattern the market had. I'll pass that. It's an extra piece of data right there. In the cotton market, cotton has the pattern of higher lows, higher highs. Aren't you glad I know these charts almost by heart? Overbought, in an uptrend, sideways action, trying, I think, to reach up to the upper Bollinger Band. To get to the 18-day average, you're going to break this pattern of higher lows and higher highs, which would not be what you want to see. This is also a seasonal time where cotton typically gets a bounce. In the cattle market, what's this cold weather going to mean for it in the Midwest? You can't move any beef. Nothing's going to move. With weather 50 below zero, wind chills in a large swath of the Midwest. We've got the higher lows, higher highs. By the way, we're going to be back into the 30s this weekend. So this is just a passing phase, but what a phase. Bullish, not embedded, overbought, support back at 126.45. In the feeder cattle, support now at the 18-day average. Today's action gives you a pattern of higher lows, higher highs. Today's high took out 144.87, support back at the 144.05 area, and if the market can lift up, you've got 2 combination zones of resistance, the 146 area from the Bollinger Band and 146.95 from the 100-day average of closes. In the hog market, if you looked, you were stretching yourself out under the lower Bollinger Band, and all you did is bounce back into it. This is no more than a bounce. The trend still is lower highs, lower lows, bias down. And now the market, if we take a look, both numbers today finished under 20. Yesterday they were both under 20, not the day before. Is the market going to convert itself from being oversold to locking in a bear trend? We're going to find out. You know, our futures trading kit contains so much for you ag traders, something you should definitely take a look at. We really have a lot of information in it. This gives you an idea, especially for those of you newer to the futures markets, of some of the really neat basics all in one spot for you. But we do more than just all this. It's from the exchange brochures, little quizzes that we put together. We explain how everything began and take you right to today. What about these popular chart patterns? You know, you need to learn them because so many people talk about them and where they're going. You've got to learn a bit about technical analysis. We teach different ways to do that, make it all very simple in one spot. What about options on futures? You know, if you're watching CNBC, you see so many people just talking options, not trading the stocks or the ETFs and futures. They'll do the same thing. I happen to like futures. Then we have our two series. We have Pivot Point and the Arun Indicator. So we give you both different videos so that you can learn these two important indicators. And this gives you an idea what the exchange has put together, how they work with everything. They answer the questions. There's quizzes in here. A lot of fun to learn with. How do you get this free futures trading kit? It's simple. Give us a call. You can go to our website. In our website, you'll see the futures trading kit and other offers that we have. Click on it and away you go. I'm Ira Epstein. See you. I'll actually see you on Friday, but you'll see my video tomorrow. Take care.